streaming link.
Yep.
Okay.
Yeah, so just send me the link that you'll share on Twitter.
I'll do that. Don't worry. Share the Zoom link to you. Let me post the link. I am live.
All right. Would you like me to mention something like specific that you will be talking about? So
You can talk about anything like you have on your agenda.
okay. So I'll mention that going live for. All right. I'll also post it on my Discord.
Okay, cool.
Um, and also on our subreddit. So we're quite we have somewhat a bigger audience on Reddit, because this is where really this is where I started, as I told you, the newsletter, etc. at the
Sure,
beginning.
sure. You can share it over there.
So that should be
Okay.
interesting.
I think we're going to have some people joining in now.
By
Uh,
the way, I really love your account, your content, and your way of
okay.
commenting about things.
Thank you.
Very, very amusing and informative to follow. So great combo.
Thank you. So hi guys. Good evening. Hi Jeremy. Hi Vani. Hi all the people who are on YouTube live. Hi Kulwant. Hi Vivek. Good evening. So as I promised, I'm gonna have Amin. Hi, Devinder. He's going to share his product, talk about all the earnings. You all know how much I lose on the earning trade. So he's here to help us how we can optimize and concise our earning trades by all the research and all the tools at our discrete. And he's going to showcase us how we can use that, leverage it. And then we can also have some Q&A with him. So I'm gonna give Armin now the screen. He can share a screen, and then he can start talking about himself first, and then showcase us the product. And guys, please feel free to ask any questions on the YouTube chat, and I'll take up your questions and ask him directly. So, Armin, stage is yours now. You can have it. You can share
Great.
your screen, and then you can do your session.
All right. Is the screen share is up? Or I don't have to do
No,
anything.
my screen share is on. You
Okay.
need to share your screen now. I'll stop sharing. You can share.
Okay, got it. Yeah. Let me go ahead and share. And boom, here we go. Should be up.
Yep, I can see your screen now.
Okay, great. Thank you, Navaldeep, for the invitation. Glad to be here. Welcome, everyone. So, quick words, as Navaldeep mentioned, I'm founder and CEO of Earnings Watcher, somehow new company, a new service for retail traders, focused on, as Navaldeep mentioned, earnings plays, really. And so, today I'm here to basically give you sort of a demo, a use case of the kind of research that you can do with our tools, especially focused on what Navaldeep mentioned, hopefully to help at least lower some of these losses, or narrow the focus to help you basically find good opportunities or better opportunities. As you know, earnings happen all the time, and contrary to common belief, they're not necessarily only a gambling period. A lot of approaches can be taken. One of them is this, as you will see, strangle approach on some identified names. Anyway, the idea of the tools and the platform of Earnings Watcher is really to be a place where you can do all of your research and studying of earnings trades in one place, right? So identifying opportunities, studying past moves, calibrating position, or scanning opportunities. We'll get through that in a minute. A bit of background about me personally. So, as I mentioned, founder of this company that started around 2 years ago. Started on my own with sort of a newsletter more focused on the insights and the strategies behind the earnings. And as we grew, really, we found that there was really sort of a demand and a niche for this set of tools to really help retail traders in an intuitive and so appealing way. Really makes the most out of earnings through easy to use tools and straightforward research that is based on data first and foremost. So glad to be here, and we've grown since we've developed of the platform. So happy to show you around and hopefully help solve of that some of the earnings challenges. Especially with the big earnings season coming up early next year. So hopefully you get the tools to equip you with that. As Navadip said, so yeah, feel free to ask questions, etc. Happy to answer anything you would like to ask afterwards. And so from that, let's jump in, right? So as I mentioned, really, the idea is I'm logging into the platform. I'm an retail option trader interested in playing earnings. I'd like to, as Navadip mentioned, have that approach of I play strangles. I want to bet on basically what we're doing here, as you know, is betting on volatility. What are the best opportunities? What are the risk and rewards associated with them? I'd like to do a selection and basically dig deeper into names.
Okay.
Okay,
So
uh,
I mean, one thing,
yeah,
like
go ahead.
today we had Costco's results, right? So
Yes, we have
how
got.
would you simulate, or how would you actually, like, imagine it's 3 p.m. It is not like 4 p.m. when the results were out. So
Yeah.
if we are using your tool, right, how would we trade Costco?
So since our tool is based on real data and upcoming earnings, etc., cost was since it already passed. We just updated basically the whole pipeline of data
Okay.
updated for the next week. So we'll do the exact same example, but with another name. We have a lot of names coming in the next week.
FedEx, I think FedEx is next week. Accenture is next week.
Yes, so we have Accentures. If you have a specific name we would like to focus the analysis on, sure. So we have Nike, for example. We have Accenture. We have FedEx.
Let's do Nike, FedEx, and MU.
Okay,
Okay.
cool. I think they are the three most popular. Okay.
Mm-hmm.
Um, so let's start ahead with quickly give you an overview of what you're seeing here. So this is the home screen, right? The idea is to help you at least start the first the first step of this research. Here, remember, we want these good opportunities for strangles, right? Long volatility. This is what's called betting that the actual move will be higher than what's priced in. So directly, I can go ahead filter for a full week liquid options. I can look at all the earnings coming up, and I can do different sorting, for example, to see what are the lowest implied move for the upcoming week. I see here directly that Accenture for before open on the 19th. Well, I see the implied move of 4.3. The average move over the last 10 years is 5.4. Standard deviation, I see that the last move here on the last earnings was a 6.5. So quite interesting, since see this was a profitable scenario. This is the type of plays we're looking at. And so let's go ahead and say we're interested in Accenture. We can add it to our watch list and start doing this analysis on it. Okay. Now, we first bunch of piece of information that we gathered from this home screen was that implied move, right? The idea is we want to compare basically the current market expectation, what the market is pricing, etc., to what happened in the past, the historical behavior, to get a realistic sense of what's possible as scenarios. And really, by comparing these past moves to the current pricing, we can start at least to identify opportunities where that implied move is perhaps not always best positioned or spot on priced in, given that stocks can be very volatile, etc. We'd like to basically take advantage of that discrepancy. Okay, there's maybe room here that the move is higher than that implied. So let's dig into Accenture. Here we have a bunch of numbers. Really, the idea, this is the move analyzer, one tool of our platform. It really shows a recap of past moves, basically, with different numbers and statistics. So let's directly dive in. What was most interesting for us as long volatility, so betting on a big move, is basically the move on day of release. This central column we see here in this table that's showing all past releases for Accenture here in the stock. So this is the move on the first day of trading after release. This is an information that's important for me because this is basically the what I'm betting on, looking at what happened in the past exactly for that date. Important thing to notice is, so these highlighted rows are really dates where this move on the day of release was actually higher than the average move calculated on that date. What does it mean? This is really basically the dates where we, as long volatility traders, were profitable. The market, what actually happened in the market, the
Mhm.
realized move was actually higher than what's anticipated. And so one thing that we noticed directly on Accenture is that we see quite of these dates happening, at least in the last couple of years. We can browse directly to see what these numbers look like. Two main numbers I start to keep in mind are the average and standard deviation. So this is really basically informing me about the average move over the last 10 years, but also the dispersion of it. How much dispersion, how far it goes above and beyond that move. Keep in mind here, we always look at plus and minus, so absolute moves. As you know, as triangles go, we're not really interested in the direction, more of the amplitude of move. So, okay,
Mhm.
I see a 5 point. Go ahead, Najal, if you have
No,
a.
I'm just listening to you. Carry on,
No,
carry on.
good, very good. No, no, if you have to jump, want to jump in or something, always up. So
No,
this is
just
the
carry
first thing
on.
I noticed, um, that this 5.5 is a bit higher than the implied. Okay, so this is a good sign for me. 4.3 dispersion. We'll see how to apply this rule, but also a good sign. This is somewhat a volatile stock. I can directly go look at this histogram. This is the distribution of moves. Okay, this is a way of looking at basically the numbers in this table, drawing them as counts versus their value. So I see that the range goes from -11 to +25. +25 is the highest move that happened in all basically the past moves in the last 10 years for Accenture. And we see that it's quite an outlier, that not only it happened once, but it's quite far from the second highest, +9 value. On the downside, the highest is -11, a bit far from the -8. Okay, so I see that overall, ±8% is a somewhat realistic range of move for Accenture with these outliers. And keep in mind, we as long volatility players, this is why we're studying this past distribution, is that again we want to compare the current expectations, basically what the triangle is pricing in at the end of the day. This is what we're interested in, compared to the distribution. The more skewed and the higher, the fatter this tail on the right and the left, the better for us, basically, because obviously we'd love to buy strangles on the release where the 25 happened, but we see that's the best case scenario. But there's quite also some moves above this 4%, this implied move that we see. So this is what can point me into the direction that okay, this is some maybe a good candidate for these long strangles. Um, so since we don't have basically a lot of time, different features and things you can do on the screen, filter for different time periods to focus only on different times, for example, or years, filter directly for the last period. So let's go ahead and directly look at maybe the last 2 years, see what that behavior looks like. The average move we see just over the last 2 years is still high, still close to that 5%. So nothing here to note. We can and a bunch of other things like comparing to the SPY move on that day, to compare to market conditions, to the volatility index in general, filter for same volatility. Lot different other steps that I can take to continue my analysis into okay, how volatile does it look, and especially how volatile is it looking versus those current implied.
So
Um,
I have a
Go
couple
ahead,
of
Dinamal.
questions
Yeah.
here. So when you talk about volatility,
Yep.
does your system give us an idea that yes, this time the volatility is higher, and based on that, you should look for a bigger move?
So,
Or in case you also consider the Greeks around the
yep,
options because you're only doing
yep.
option.
So spot on, and this is Nawadip, a great transition to what's coming because, as I said in the beginning, so there's really two big parts in earnings trading or in any general type of trading is looking at the past first of all, and then the idea is to compare to the present. And so now we'll go to the present looking at actual options, and the idea is to compare what the market is currently pricing in, what the options are pricing in, and how things are looking versus this general study we did of the past moves. So let's go ahead now to the second big features of the big tool of our platform, a simulator. So this is an option simulator, basically, that has the specificity to model the phenomenon of IV crush. So that I'm sure you're all familiar with. This is what we're up against on earnings, the fact that the IV of options will drop on the day of release, or on the first day after trading after the release, and the actual move on the day of release needs to counter that. Okay, and so our whole strategy is to find the strangle with a break even, an implied move. Again, keep in mind, our edge, basically, or our selection comes from that comparison and study of the past moves. And we just seen one piece of information of that general implied move. The general implied move, by the way, that comes from the straddle, as by default closest expiration straddle. And now we can dig more into it. But we've seen that that 4% is somewhat lower. So now let's study more into details that. What we have here is that our simulator is modeling, as we said, that IV crush exactly so accurately per strike and per expiration to model and project the price behavior of the options through the week. So here we loaded up with a classic, just by default, say at the money call. Let's go ahead and just quickly select one quick example before we go to the strangles to show you what these numbers mean. And out of the money call for Accenture. So first day of trading after the release is this Thursday. The IV crush is somewhat somehow not yet very strong on Accenture. We see that the IV of this call, little out of the money of 32 delta, you see here in the middle card with small gamma, around 30%, 29%, will drop to 27. Okay, but as you know, really this is the reason why we see a larger break even on earnings, and this is what we're countering, basically. So a very important thing for us options traders for these long volatility strategies is really to know what we are up against at the end of the day. And so if again here we're just showing a default classic out of the money call, but going with this position, you know, the implied, the basically break even on the day of release is exactly 3.3. This is taking into account the IV crush, but also the theta decay that goes, as you know, higher and higher as the end of the week
Sorry to
approaches.
interrupt you. I mean,
Go
can you
ahead, go ahead.
take MU instead of Accenture? Because MU will be much bigger on the volatility.
Sure. Let's go ahead and select MU. Obviously, yeah, Macron is very volatile. So before we do the simulation on the move, let's really quickly go ahead and look at these past moves just to know, again, of these opportunities. How did it behave in the past? This will, again, just give us a benchmark
Mhm.
against what we'll see in the options, okay? So higher move, 6.9, around 7%. And actually, this is even a better example, Navaldeep. Thank you, because see how this distribution is very much skewed. See, we have a very high tail. Like we see that these 9% moves happened as frequently as, you know, the center of the distribution, basically. So this 7% average is quite skewed. Good for us. So a good choice, Navaldeep. Let's dig more into that. So as I was saying, for any stock that we'll study here, so let's use micro technologies. Very important for us to know what we're up against, and so what is basically the current implied volatility pricing, basically, and not only the implied volatility. I want to dig into more into details where to know the implied volatility plus the theta decay plus everything that's revolving on options pricing. What am I going into? What are my risk and reward? And this, Navadip, will be very important, especially for traders who you know, have full-time jobs and, you know, are not active every minute in the market, to set their targets, because you can get into it, do all of the study and know that, okay, this is what I'm taking, this is what I should expect, given this, again, accurate analysis, because we take into account that IV crush, etc. Now, okay, let's do dig in directly. We're interested in strangles. Obviously, we open up this classic strategies button so we can compose positions manually, or we can browse the classic ones here in this menu
Mhm.
under long volatilities. So we have this straddle, and as we go down, we have wider and wider strangles. We have a bunch of numbers here, so this is for the closest expiration. But let's see. Let's perhaps go for a quick example of this 85 call, 75 put. Right.
Mhm.
Let's open its full breakdown. And now the idea really is to know what am I going basically against in this. Not so centered. So perhaps let's take one, or let's change the put leg to make it a bit more delta neutral. As you know, this is what we're aiming at when we go with triangles. So the delta of our call here, which as we see, we're browsing around 46 IV, 33 delta. So let's try to counter that 33 delta by a put on the other side. Looks like the 71 is a good example here. Yeah, 71, 72 is a bit higher. Okay, run the position. So what do I see? I see its price. Okay, it's this is what it's costing, 126.
I mean,
Sorry, go ahead.
can you can you speak a little slower because people are finding
Sure,
it a
sure.
little difficult to
Sorry for
capture.
that. I'll make sure to take a slower pace.
Yes, thank you.
Okay, let's get back to the simulator. So now we will compose a strangle, basically a call and a put out of the money. So for Accenture, for sorry, Micron, let's go ahead and select it. I did a wrong manipulation by mistake. Um, and so what we want is to compose this white strangle. Let's start with the classic straddle, so slightly different version of the position. Let's start at the 83, perhaps, a call, and take the 82 put, okay, for the closest expiration. The what I need to know as a option trader going through earnings is really what, as I mentioned, what am I going against? Okay, we studied the past moves. We've seen that it's quite micron technology is quite volatile. The range of move is quite high. Now I want to know, okay, what is my convert implied? How well, what are my chances basically? So directly, the first number that's interesting for me is this break even. This break even again on the day of release. So Micron Technologies will release after close on the 20th. The first day will be on the 21st, basically. And so, taken into account the IV crush plus the theta decay on both our positions, we see a first piece of information that's important for us: this break even. Now we see that it's a bit centered, quite well centered, around 4.2% left side, 4.5 upper side, and so I know that to basically be profitable, I need the move to be higher than this 4%, and this is where I can start combining what I've seen in the past in the past moves research that we've done. Remember, this 4% is way lower than that 6% average we've seen. So by itself, this is what we call a good likelihood of success. This is should be a good candidate for this long volatility. I see its price for dollars 48, quite neutral delta around zero, and a bigger gamma that we're playing on. Now, the other important question I want to answer, I answered the first one of, okay, what is my likelihood of success based on this implied move versus the distribution? Quite good, it looks. Now, the other thing that I need to be aware and decide of is, what is my risk profile? Basically, what am I standing to lose? And what am I, most importantly, standing to win? Because let's be clear, I'm sure you guys expect that and know that most of earnings strangles are very risky plays, and so they lose most of their value if the move is not big enough. So
Right.
that you know that under 4%, if you have something in Naval, no,
No, no, I'm saying I myself like lose a lot on these moves.
because and you see why you lose the loss, the big loss basically comes from the fact of this IV crush that we discussed, and Eva and theta decay that all play together. Let me just refresh the screen. I think there's sort of a time difference playing where because things update. Okay, should be good now. Let's open up new again, because this is the time where all of our data updates for the full upcoming weeks, basically, since the week is done. And so what I was mentioning, and your experience of this big loss, and so it can be a strategy, Naval, that okay, we're sort of doing a smart gamble where it's okay for us to, we're accepting that we lose most of the position if the stock does not move in our direction, but at least what do we stand to win from that? Do you mind if, let me open Accenture, because I see that there's perhaps a small issue. I think, yeah, it's for the upcoming. So I think if we can do it for Accenture, it will be
Okay,
better. So
okay, carry on.
same, exactly same use case. So let's compose the classic, the closest to straddle we can get to 335 for both. I've seen again my break even. What am I up against? I need to beat. By the way, Accenture is the same as Micron. They're both. It looks like undervalued. Remember, we're seeing here 4.8 break even, very low compared to also the average of Accenture. So you see here, first thing important, Naval, is the projection, the price projection of this strangle. Here we have a straddle. We see that going basically from Monday to Tuesday. This is where IV crush will drop, and so the sliders here are at zero, meaning that the scenario of no stock move at all. Well, if there is no stock move, this is the loss, Naval, that you're familiar with or encountering. If there's no luck, basically a wrong scenario, you see the big effect. It's a 54% loss, basically. This is again from IV crush, but also theta decay. So this is also another piece of information that I'm interested in, that, okay, am I comfortable losing this amount? Because this is my maximum risk, basically. Is it comfortable enough for me? And I can, you see how calibrating and using different positions, I can perhaps lower this, make it even bigger if I'm okay with it. The other piece of information that I want to know is how much do I stand to win? Basically, what's the potential profit? I see in the potential loss. Okay, I'm willing to lose a 55. And by the way, this can help me set my targets to know that, okay, by tomorrow or by Tuesday, when the release happens, if it hits 60% loss, let's say, well, I can exit because that's the loss that I projected, basically. But we've seen that Accenture moves somewhat a bit around earnings. So let's simulate other move scenario and see how our position will react. So remember, we've seen that a 2% move is somewhat popular, frequent, but still under our break even. We see that if it's a 2% move, I move the arrows here with the slider, our loss is reduced to just 41% this time. Still, okay, good to know. Now, let's test the favorable scenarios, and this will help me know, again, my targets and whether or not this is a good rate itself. We've seen that the maximum realistic move, what we've seen from the past move distribution, is around 8%, 9% for Accenture. So this gives me an idea of, in the best case scenario, the very good case scenario, or at least this is what I'm aiming at, of the stock moving to the maximum of what it usually moves. What profit am I looking at? Well, I see my position, so my straddle here that was worth $15.6 per contract will basically will be worth 27.2, so 70 something PNL. This is the other piece of information I was mentioning, Naval, where it's important to know, is it a good trade in terms of risk reward? And so doing this analysis by looking at the PNL simulated again, because we did all of the taking into account the IV crush and theta decay, especially for that day, because you see a lot of calculations out there for options where we do things at expiration, not really accurate for earnings, because these phenomena of IV crush happens during the week, plus theta decay, that's quite different. And so I can do different kind of simulations and arrive as the first step to this numbers. Okay, basically here, Naval, I'm risking around 50%, 60% to gain 70%. And I can even simulate, remember, we've seen one big move of 25% for Accenture, and that happened once, sort of a black swan event. But we see here we can simulate it and see, okay, what are the types of returns I can hope for? Well, we see that it's a 400% return. So this is the good scenarios. And these can help me also know that if I'm betting as a strategist, as I'm sure you guys do, to maybe basically do this every week or every month, allow small capital, but on smart trades where you are ready to lose most of the trades. It's really like an investment firm investing in startups, basically, where you
Mhm.
are ready to see them, most of them die, but you hope one of them is Google or Facebook. Well, the same this approach can be taken on these long strangles, where I can prepare to basically compose my positions. These straddles, these strangles, I'll go ahead and compose another one quickly, a more riskier one, strangle that you guys must be familiar
So,
with.
I mean, let
Go
me
ahead. Yeah.
share what I understood from your system.
Sure. Go ahead.
And guys on the YouTube, you can also ask your questions regarding this. So your tool is telling me average move for past 5, 6 years, 10 years, whatever the period is. Based on that, you are giving me an option to simulate my option strategies, and is helping me to evaluate whether the risk and the reward against that expected move, against that nominal average move. This is
Yep.
my risk and reward, and based on that, I can make a judgment call to whether, even if I jump into a earnings, whether I'll be fruitful or not. Is that right?
Exactly. In a nutshell, yes, it's not just about studying the past average. As you've seen, a lot of steps can be taken to know more about the past moves distribution, the fat tails, how likely the tail moves, the big moves, but the general study of the past average, etc. And then comparing, as you said, the likelihood of success. So, what is the current implied
Hmm.
giving? And then the risk profile. Is it worth it, basically, taking? In other cases, you'll find a lot of examples where, sure, even if it's maybe undervalued or not so much, it's a position where you're risking, 80%, 90%, but given the range of moves, of past moves, etc., well, you're only looking to make somewhat 30%. So not really worth it. Okay. But other trades where you can combine, make a list, basically, a weekly list, monthly list of, and by the way, another tool that I didn't have time to show is a scanner, basically, that did what I've done here for Accenture Strangle, and basically look for this type of triangle for all upcoming earnings. And you can really treat them as I mentioned, these smart gambles where uh, uh, one big move compensates basically for the losses. But they need to be with small enough capital and well calibrated and chosen to know, okay, are they worth it? Some are not worth it. It's really like you're investing in startups. I actually like giving that example recently.
Mhm. So, I think this is something a new view with respect to earnings. I never thought it like this for the earnings, so it's something new for me.
That's
Uh,
good.
with respect to time, uh, can my team or my people over here can get access to your tool so that they can try it out, like
Yes, yes.
demo or a
So,
trial version for them?
So we have a free trial open. You can register, so no credit card. You only need your email, and you can start full week or 7 days free trial.
Mhm.
Um, and then yeah, so feel free to reach out, and I'm happy also to set up a discount for you guys, your audience. And I'm sure that you find, I'm happy that you find it sort of novel. As I said, the idea was really this is not a space that was given enough importance for retail traders. These triangles that you guys do and Naval that you do are actually can be quite a smart strategy if, like anything in life, they're researched and studied and time is spent on them, right?
Right.
Um, um,
So,
so
one
yeah,
question, like, can I use this tool outside of earnings as well, like for a
what do you
normal
mean?
weekly trade?
Like the simulator, you mean that we've shown with the positions, etc.
Yes.
No, so the tool, as you know, as the name says, earnings watcher, and especially that simulator, the specificity is that it models that IV crush. Okay,
Okay.
um,
Okay.
but I actually also have another answer that you are spot on because we've had this feedback quite a lot, where a lot of our users actually like this simulator and wanted to use it for other trading, and so we actually developed a side product that's really only that simulator for a bunch of stocks. It's
Hmm.
currently still in beta, But I'm glad that you jumped into that because we've heard that feedback. So, but for earnings, the important thing is that IV crush and how it combines with the other past moves, research, etc., to really be the place where you do all of the earnings, not just simulating position.
So, is this tool based on web, or it's like something we need to install?
No, no, it's a web app that you can access. Best experiences on Chrome, but no need for any an installation or anything.
Okay.
You can
And
just
what
log
about
into the
this
website.
scanner and insights? I'll like give you 5 more minutes if you can just
Sure,
quickly
sure,
show us the scanner and the insights.
sure. So this the scanner, as I mentioned, is really a tool that basically built up, as you understood, the big features of what helps you study these things are past moves versus what is the current market expectations, and so the scanner is a way to look for these opportunities. And by the way, you can use our tools whether you buy options or also you sell. So that's another side strategy that maybe perhaps some other days you guys can get into, but very interesting. But let's focus on the long volatility. I can look for strangles. Okay, this is what's interesting for me. Well, I have a price toggle where I can choose, okay, how expensive, what is my budget that I want to allow. But most importantly, I can go ahead and remember the one of the first insights that gave me that research, that first path of study of, okay, maybe Accenture is a good a candidate, Micron is a good candidate, is because first and foremost, I compared the break even, so the implied move, to the past average. So I can actually do that over all upcoming earnings, okay, and see, well, find me, basically, I'm asking you the question, find me strangles that are between this price and this price, but especially where the implied move, the break even we were looking at, remember that 5% we've seen for Accenture, etc. I want it to be lower than the past average move. Okay, and I can choose by how much lower. So here, let's
Okay.
choose. Let's be, very say optimistic. We don't necessarily find examples for all our for all combinations, but sometimes that happens. Okay, so let's be a bit more generous, and so we're looking for basically strangles where the break even is at least lower than 80%. So the average past move is 20% higher than the implied P. Now, it gives me a list basically of potential candidates that I can start exploring and doing the same research. You can click directly on the symbol and open the moves analyzer of this stock. And so directly go here, we have Nike, for example, or open the position directly on another screen and continue my analysis. What do I see? I'm seeing that uh, first candidate, I've seen that there is 41 results for the upcoming week. So this is can be my watch list, if you like, that I dig more into. Nike straddle here very wide, as you can see here, Naval Deep. I think this is
Mhm.
really the kind of make it or break it. 90 put, 160 call for the expiration of after upcoming earnings. I see directly its price, obviously very cheap, and I also see its break even. That's a bit skewed now, so I can open the position and adjust the strikes maybe. But see, I'm looking at a 4% versus a 6% move, basically. This is the type of positions I want to get in. Another example here, we see Navaldeep, see Micron that you mentioned in the beginning. We found here a position, the 70 put 90 call, very cheap, so $1, $100 contract, quite centered break even around 5%. That's quite lower than the average move of 7% that we've seen, by the way, quickly.
Mhm.
Okay, so this can be a good candidate. I can go ahead and open it in another window. Let me share the other tab instead and continue basically my analysis of, okay, the risk profile, what am I up against, or everything that we've done, and decide, okay, I'm standing the risk with this position is this much, the reward is this much. Is it good for me or not? If it's good for me, I'll keep it and keep a watch on it. And really, the idea, I browse through this list and I can keep continuing. So here we were quite generous. We have 41 results. We can
Got it.
lower maybe the price. And basically compose that list of smart plays. This is what we like to call, smart gambles, basically. Um,
Yep, yep.
mm,
This is much more useful to me.
that's
This
good. Yeah,
tool.
I usually start with the main tools, the on one example, the moves and the
Mhm.
simulator. And this, as you see now, makes much more sense because you see the kind of research it's doing for you. And so, Bond, you see, we have a lot of opportunities, mainly a lot of strangles on Micron. We have also FedEx that looks quite interesting for really cheap opportunities. Just like yesterday, I was having a call discussing a play on cost for a person exactly interested in this. And we've seen that, a very wide strangle on cost, doing this whole analysis, etc. It can yield a return of around 3,000%. If that big move happens, and the very favorable scenario. And it made us think that it means that if you do this every week, for example, you allow small capital to gamble on these big moves. If it's a 3,000 return per, like the 3,000 is like the 200 or 70% we found with Axon Tour. It means that one win is basically compensating for 30 weeks or 30 losses of weeks. And so if I at least spend the time researching and calibrating, I can
Yep,
put
yep,
myself
yep.
in a good position. That's it. Hope I didn't go over much over the extra 5 minutes. Thank you for giving me extra time, by the way.
No, no, it's good. I would like to try this tool myself because when I'm trying what do you call earnings, I make some strategies, but this is some meaningful information which if I
Exactly.
can leverage can really help me out to figure out what am I
Exactly.
against. Uh,
Glad you see the value. So much more. There's much more to explore with other strategies, etc. Hopefully, yeah, you get a sense and you
yep.
see the value of it. Thank you, Namadip.
Thanks for doing this. And if you can share your email on the YouTube chat
Yep.
so that like any interested person from the YouTube
Yeah.
wants
So
to
it's
reach
earnings
out.
watcher. I'll send you guys. I'll send you Namadip everything.
Okay,
Uh, and glad to have been with you tonight.
no problems. Like I like to help anybody who has done something and is trying to use this platform to
Yeah.
engage and to grow. So it's totally good to me.
Very appreciated, Navadip. Thank you very much. That means a lot. And so, yeah, hopefully it gives you back value also. It's not wasted time. So
No,
glad
no,
to
absolutely.
do this.
I
Thank you very
hope
much.
like people on my end, they've also like try this tool because like we all are learning every day, every single uh, activity we are
Yeah,
doing with respect to trading. So this gives a new aspect that yes, you are fighting against this number. So unless and until this is crossing that break even,
exactly.
because IV crush is something which is not accounted anywhere. And
Now, this is what makes earnings really interesting, as
yes,
a place thing to play. And with the right information and the right research, it can really be very interesting for us retail traders.
yep. All right.
All
Thank
right.
you for joining us and sharing this tool, Amin. I
Thank
hope
you.
people
Thank you,
liked
guys.
it.
Thank you. Have a great end of call.
Thank you very much. Bye
Cheers.
bye.
Bye.
Hi guys. I'm back. Hopefully, you saw a different perspective of earnings, like what I saw. It looks really meaningful. Very interested to see how things go there. And yep, I liked it. I want to try that. And again, it's a free tool. You can go and try it for a week, and if you like, you can pursue it further. Again, I'm not taking anything. If you have any doubts, something, I love to help anybody who like, even if you have something outside of trading, if you want to talk about artificial intelligence, you can talk about any tool you build. It just gives you a platform so that you can have experience to share, experience to speak. It takes a lot of courage to come and speak. It's not easy. And yes, Amin is not a native English speaker, so he had that accent, which is not easy for all us to understand, but I think he did a good job. All right, so let's come and sure, Bob, like we all need to try because unless and until we try, we have confidence, we'll not be using the tool. It's very simple. So let me just log in into my Think or Swim and then we can get started. I think we are late, so I'll not be doing full-fledged list, but we'll talk about indexes and we'll talk about some of the big stocks. Okay. Because if I do this manually, I can quickly fill this information very quickly. But when I have to explain, it does take a lot of time. And I've already used like 45 minutes of your time. So I'll speak about the futures and then I'll fill this sheet out and give it to you all so that we do not lose too much time. In between, if you have any questions for me, feel free to ask here. If you want to join the Zoom call, I can share you the Zoom call right away. And if you want to talk, you can talk. Let me just invite, copy invite link. RSI is nothing. It's a bullshit indicator. I have shared that link now with respect to. So right now, as I mentioned, the day started, right? I mentioned today could be the day for Boeing, Caterpillar. Where is my da, da, da. Huh. Small cap, mid caps will continue their move up. Boeing, Caterpillar, John Deere will run. Banks will run. Tech will consolidate here. So even by mentioning this, I was very clear that yes, these things will not move. Look at Caterpillar, 6% move. Look at Boeing, 2.5% move. John Deere, 3% move. Bank of America, 6% move. See, I don't have JPM, 2% move. So all these moves come by understanding the market. It's not by understanding uh, just the technicals. It's just that you need to know what is happening and what will be the impact of macros on the market. So the rate cuts, I mentioned in my Telegram yesterday that Tesla will be really impacted by the rate cuts, and that's why you see a massive move from 230, 228 all the way to 253 today. So I added Tesla calls yesterday because I was confident that yes, rate cuts would matter. And during the whole night and the pre-market, Tesla was not moving, but the market open Tesla started to move, and then it moved, and moved until the end of the day. With respect to the market, Microsoft gave back, Netflix gave back. Nvidia, I went short because I showed you a dark pool of 480.88. And once it lost that, it just bazooka to 475, 475, 476 is really important area for Nvidia. And again, you need to remember all this in your mind because when you are trading, you cannot go and check these things. That's why we prepare all this information upfront so that we can piggyback on it when we are not having access to charts or something. So we traded that, we got out, and then Nvidia retraced. Now, uh, question is what will happen tomorrow? In my understanding, and I think I am going in the right way, we have seen 2 good days of IWM move. Tomorrow we may consolidate on IWM. IWM has broken out. So if I go into the charts of IWM, this is my chart. Above 185, where it was kind of consolidating basing, it got a breakout. Again, it was a 38.2 Fibonacci where it was struggling. The moment it got break, it hit 61, created a gap, and then it went on to almost 200. Now it is creating a supply zone hit. Like previously, it came into this area and made the top. So this area should provide some level of resistance, maybe something like 1 2%. And I want to keep this gap open. I do not want to fill this gap. If this gap is filled, then the next leg will start with some consolidation. But if this leg is not filled, this will be like, if I put it in simple words, if this gap is filled tomorrow, okay, we may not get that confidence. We are going to move up on IWM 100%, but that confidence will be reduced to maybe 60%. If this gap is retained and we create or we hold this gap, I'm sharing on YouTube. Yes, it's live. Ajay, I don't know what's wrong with you. Uh, Probability is 90% if we hold on to this gap, that IWM will be aggressive. Keep that in mind. IWM has broken 61. 194 will be a excellent support. If it drops down, buy there. Do not try to short IWM. I'm just saying, I want to hold this gap. So even if it dips, gives you an opportunity, make sure this gap is not filled. In a bullish market, gaps remain open. Yeah, Ajay, I don't know what's your problem. You have all these funny questions and now you're not able to see. I can see on my YouTube very clearly what I'm portraying. Anyways, next possible target for IWM. You see, IWM has struggled around this area. That's what I'm saying. It's going to find a little tough, but if we have a weekend close around this or above this, we are going towards 210 in a straight line. Okay, so be ready for a big move now. Again, 194, if we hold this number, I will be a buyer if and get in consolidation or if any kind of dip happens here. With respect to tomorrow, I think tech should do, like if I go to Nasdaq first, and I've shared Zoom link, nobody has joined, then I don't know. If you're not interested, I will not stop sharing the Zoom link. Now look at my Fibonacci numbers. 16828, 16824, where we are struggling, right on that. This is not today's numbers. These are the numbers for past, let's see how many days. This was defined maybe in July. Yep, it's in July. So that's the power of Fibonacci. We were consolidating here, 16,071, right there. We broke out. Now we are right there. Now, why I'm saying tomorrow will be a positive for uh, NQ? Look right there. We tested this red line. If we wanted to fall, we should have broken this, come to this 12 EMA and gone for a back test. And then we would have decided, oh, we want to do a gap fill or not, but not. We went, tested, and bounced. Okay. Now, next candle is coming as green. The moment it crosses 16,824, next area is 18,000. That's 1,200 points away. I do not have big resistance anywhere. And remember, we are coming to this stage after 2 years of consolidation. This was uh, Nasdaq's in December 2022. This is right there. In future, we'll have 17,560, 17,870, 18,000. These are the targets. And when a market breaks out for all-time highs, it will not stop. You need to understand and you need to value the behavior of the market. Do not try to mark shorts for no reason, because that is not going to help. Market is going to give you opportunity in a dip, you buy it and you take it forward. You need to just remember one thing, that the stocks you're choosing, you need to be much more towards small caps, a little less towards tech, more towards banks and industrial. They will be bought on every dip. Like tech used to be, then new theme will be industrials, banks, and small caps. Bajwa Saab, market New Year has nothing to do with it. One thing you need to remember, people are going to go on Christmas holidays, so there will be low volume, and low volume is a recipe for a big move. And these big moves will happen in the small caps because they are more shorted. These big moves will not happen in tech because they have already reached their highs. All these small caps are like 20, 30, 50% away from their all-time high, or like 52-week high. Like Boeing high was 400 something few years back. Right now it's 250. It has a lot of journey to cover. And I see it's going up much higher from here. Probably after January ending, it should see 300. So if you want to invest, invest in Boeing. With respect to ES, it's hitting that 4779 again. Uh, Same number, which was right there. That's the importance of these Fibonacci's. These are 100. Once we clear this, I see 4980, which is about 180 points, and 5100. I don't see any issues whatsoever reaching there. We are breaking out of this zone. Remember, we were in this regression channel all this time. And that's the beauty of this regression channel which we have created. We can very much leverage this beauty. Ajay Tyagi, I think you are totally new to trading. These are absolutely stupid things. Quad, which has nothing to do with the market. It is the expiry of option futures on the same day. Okay. So if you have options, it will be expired. They will have some volatile moves during the last 5 minutes, not throughout the day. Please stop reading these articles. Please stop reading these tweets. Follow the price. All right. Follow the price. And anybody on the Zoom chat want to speak? Okay. So after this regression channel consolidation, I think we are looking towards 5100. Now, in case we get a retracement, which will be a healthy retracement, in case uh, there is a situation, that will be the back test of 12 EMA. Right now, the 12 EMA is a very important line which has been managed very well by the futures and respected. Right now, we are at 4779. Tomorrow, if we break above 4779, right now, if we go by the simple principle, this was a new high on Wednesday. This was a new high Thursday, but it created the new high, went down, created a fake breakout. Okay. Now, if we want to avoid this, we need to clear this. Otherwise, it will be a fake breakout. And if we start to go down, it will become an evening star, which will complete by the test of 4668. And that will be an important point to go long. All right. Somebody has a question on the chat. Gopal, you can ask your question. I am entertaining those questions today. I'm just explaining the thought process for the next moves, because the moves have been very massive, one directional moves. It's like from 4100 to 4700. We have not seen a single retracement. That's a bloody bull market. Okay. So
Right. If you're not, touching on the stocks today, can you talk about your outlook for the next week on Nvidia and Tesla so that we have an idea what to expect?
Tesla should go high. Tesla should go higher because Tesla was doing the price cuts to compensate for the higher rates. Okay, now look at this thing. It was consolidating. It tested the 12 EMA and it tried to break out. Okay, now only thing it needs to do is it needs to hold this area 250. If it does 259, 265, this is pretty much coming. The biggest concern for Tesla was the higher rate of interest, which was kind of pushing them to cut down on the prices. Now that will go away. Whether we have rate cuts in March, because the market is pricing in that, I will not go there because we have enough time to see a failure of that. But for now, rate cuts are accepted, and we are expecting 3 rate cuts starting from March.
All right. And
Nvidia,
then Nvidia, we talked about in our Telegram. We talked about the flow, the 17 million flow coming in yesterday, right?
yes, and that's why
But
it never went down.
yeah,
Again, 473, 12 EMA, long-term line, tested everything to the point. Today lows is 474, 12 EMA is 474. Okay. Now it has just back tested and then rose higher. It is making a dodgy. But tomorrow I'm expecting a gap up at 486 and it's going to cross this. You just wait and watch. Why I'm saying so? Let's break it down into 30 minutes, which is my favorite chart, and convert this into high Kenichi. Look at this. It's making a base, holding it, making higher highs, and it is above this selling zone, this pink block, where it has struggled, which is 481. It closed 483, and now it's getting ready. This is the area where it was struggling, right? This is the area where it has closed. Now it should go higher.
Awesome. Thank you. That's all I wanted to ask.
Stop loss is 473. For every trade, you need to define your risk, and 473 is your stop loss.
Yes, I have already set in place. Yeah. Thanks.
So guys, anyone else who wants to ask, you can come on Zoom. It's better to interact and discuss these things.
Hey, Naval, can you look at like a regional bank sector like KRE, please?
Yeah, I am into KRE positions from last 5 months.
Oh, you are? Okay. Me too. Just wondering.
I'm at like 41 something.
Okay.
I'm going to hold it.
Yeah. I'm actually doing deposit, like which is the leveraged of it. But I was wondering, does it have more room to go up, or should I, get out and then, book profits?
Hold it.
Okay.
Start to hold, learn to hold.
Yeah, I've been holding for a couple of weeks now. So certainly it paid
Hold
me
it
well.
for years.
I mean, I
It
am
has
into
dropped
like
a lot. It has dropped a
so
lot. Imagine like Apple or Amazon dropped in 2020 in COVID.
right.
Since they're like 5 or 6 times.
Yeah.
Not Amazon, but Apple at least, Microsoft.
Right.
Here is going to be the same.
Yeah. Okay. So I don't. I mean, I didn't buy shares. I bought 2026 deposit calls. So I think I should be okay holding them. It's 2 years almost.
Yes, yes.
Yeah.
I have calls as well as stocks.
Okay.
This was 78. Right now we have 53. Imagine it needs to cross 78 and has to make newer highs. So probably 100, which is still almost 100% from here.
Okay, sounds good. And similar setup looks like for the solar, like I'm holding
That's a
10
bullshit.
calls.
That's a bullshit.
Okay,
Avoid that.
avoid solar.
Looking at
Okay,
ENPH, it will rise. Look at the strength. There's hardly any strength in this move.
okay. So that's why what I did is instead of playing individual stocks, I bought the TAN ETF,
It's
which is
fine,
like,
but these will run because they were short. The
right.
moment the shorts are gone, it's going to come back really hard.
Okay. So stay
And
out of solar, you're saying.
yes, stay out of solar. And you can also do very simple thing. Like if you do not do anything fancy, go to volume profile.
Mm-hmm.
Uh, okay. It bounced because the volume was limited here.
Mm.
If you go, there's a volume gap at 25, which needs to be filled. This was a low volume area where it went. Now it's going to come to a bigger volume area where it will struggle.
Okay.
That's it. It has to fill this gap, maybe one day. It's coming for that. The IPO gap. Yes, it has rallied a lot, but is it worth it? No. The company which
Okay.
cuts its guidance and everything, even then it's moving. So I will not call this.
Yeah,
Uh,
yeah, yeah. Certainly. That's why I went for the all the sector like TAN. So just to cover myself there. But
See,
all
again,
right, thank you.
I would encourage you to focus on the sectors which are moving,
Okay,
not on the sectors which have moved.
got it. And
Uh,
those are, I think you said small caps and the banks, right? Regional banks.
Banks,
Those are the ones.
industrials.
Industrials. Okay.
Uh,
If I want to go to like a ETF for industrials, is it XLI would you recommend, or is there a like a?
I don't know from top of my head. You need to
Okay,
check.
no worries. Thank you, sir.
Okay. Uh, can we call an evening star on the SPY? Evening star is potential, but if we break down, so if we lose 468, then that will be a confirmation. If we hold 468, then that evening star may not pursue. My Telegram details are on my Twitter. You can go and look at the profile. I have answered this million times, but if you go to my profile, look at highlights, scroll down just 3 tweets, you can click here. Share your thoughts on SMCI. I just gonna cover SMCI. So SMCI is again a company which does nothing, but what it does is it is a provider of uh, hardware to the other companies. It is a bull flag for now. It's about to break. The moment it crosses 300, it should go for 350. Airlines are good. I've already mentioned I gave the airline flow as well. So airlines are good. This is good. MRK, Merck. Like this is the very slow mover. It moves, but very slow mover. Right now, if you look at the move it has already done, it's an inside day for now. So I if it crosses 107, 25, 30, then it's better to trade. Otherwise, it's again a very slow mover. So I hardly trade MRK. Okay. So yes, I'm expecting 4100, pretty evidently. into first quarter of next year, unless something negative happens. The amount of liquidity in the market is enormous. It is not slowing down. So we are going ahead towards 5100. So play with that in the mind.
So Naval, can I ask a question?
Uh-huh.
So this is regarding 401k. So I sat out actually because everybody was talking about like, the 3200s and all that crap. So, anyway, I sat out. I'm still sitting out almost 90% in cash. So now I'm hearing you say 5100 and then others saying 5200.
See, it all depends on the everyday basis.
Right.
You see,
But since
market
401k,
market
I
is very
can't.
dynamic. Let me just
Right.
answer you.
Sure.
Market is very dynamic. So tomorrow, if let's say there's a war between China and America, all of a sudden, market will crash immediately.
Mm-hmm.
So what we do in our long-term investments is when you have 401k, make sure you have equivalent hedges into your 401k.
Like
Like for
401k.
example, you have uh, nest egg stocks like Apple, Amazon, Microsoft. Then always have QLD, which is twice the ETF of going down of triple Q.
Yeah, unfortunately, my 401k is like small cap, large cap, and then bonds and stuff. Nothing
That's fine.
fancy.
You can
Yeah.
always find a hedge for your portfolio.
Okay.
That hedge will be a waste all the time, but it will be much better if something goes wrong.
Right.
So
But since it is long term, right? I mean, these
this
wars we
is,
can't
again,
predict,
you need
right?
to understand there is never a long term in the market.
True, true, true.
Every day your goal is to make money. You
Right.
don't know in 20 years, like I have stocks which I bought in 2000. They are like none, like almost null and void at this time. And there are stocks which have 100 times the price they were there in 2002. If you try to find out how many stocks were 100 times, you'll find only 10.
Yeah.
The rest of the stocks, they always lose value. So there's no
Right.
long-term investment. The long-term investment is only the index.
Yeah, index only. So I'm only talking about SPY or IWM. That's the only things I'm talking about. I don't have anything else in 401k. So if I had to put in the index right now, since it ran up a lot, my question is, if it is 50.
If I have to invest into the index, I will start with 25% now.
Okay.
And if I get a dip, 10% dip, or maybe 15% dip, I'll invest 25% more. If I get a further dip, I'll invest more.
Okay. So go in chunks and then
It's always good to go in chunks. One
yeah.
single investment, one time, the probability of loss. Like if you go all in right now, you may all of a sudden something negative happens and then you're lost. So
Right. I
be
mean,
in the
yeah.
mindset, yes, you're investing 25% uh, into the SPY and use that money. If it grows, well and good. If it doesn't, it goes down. You have capital to average it
Correct.
out at a lower price, which is your
Yeah.
game. Because
Right.
index will be 10,000 in next 15 years from here or
Oh
10
wow.
years from here, right? So if that is going to happen, that's not a factor which we can ignore because the value of dollar will depreciate. The inflation will rise, and that will lead to the market going into that direction. So if 10,000 is your goal, then like imagine 10 years from now, you look at in the hindsight and see, I invested 25% at 4,800, which is still like almost 50% from there. You'll be happy. That's why if you're an investor, always be in the market, have your hedges. If you're new into the market, make sure you do not invest one single time. Invest in chunks, invest in, I would call this a staircase investment. Every dip you need to buy.
Okay. Thank you.
You guys asking me to cover every stock which I have done. Netflix is an inside day. It started to break out. I expected it to break out, but it rejected. Almost came back to test 12 EMA. If it holds 468, which is solid area, and that's it. Ramchandra Reddy Kundamala, I have answered you billion times. You can find the scripts on my profile. Search it. Do 1 minute job. If I go into my website, right? Not website, onto my Twitter. If I search right here, novel for you, and within novel for you, I can search for scripts. It will take me 1 second to find it out. I'm just taking this last as see, I do not like people who are lazy, who need spoon feeding. I love to help people who try something. It's like you cannot help somebody to help himself. If you are doing something, if you need some help, I'll be there. But if you do not want to try, like searching for a script, I've answered this 10 times to you. People in the group have answered this multiple times, but you don't want to go and search. You want everything to be spoon fed to you. I hate that kind of attitude. Meta, I think it's good. It also back tested as 12 EMA. It was creating an evening star, but kind of negated that. Let it cross 335 and the game is on. 335 above, it should go for 369. It's if it fails at 335, do not trade. 335 needs to break. Service now, Aditya. Service now is right here. Service now had an evening star, broke down massively. If it loses here, it lost 12 EMA. So 690 is my stop loss. If it loses the 675 area, it may come to 650 and the gap. But be mindful, if it regains 691, it will continue its upward journey. How do I review Indian stocks? I do not review Indian stocks. I just trade the index. VK. All right, guys. Thank you for joining. I will post the sheet if I get time with all the levels. Otherwise, thanks for joining, and hopefully we'll be able to use that tool and try it out on FedEx and MU's earnings and see how it works out. But thanks for joining, and please join more often so that I also do these things more often. Thank you and